Hello, it's Adil bringing you a review of the two commodity pairs or commodity currencies, the Aussie USD and the Kiwi dollar, to see exactly what's going on in the risk FX world, okay, of intermarket analysis, and to see if we can gauge whether or not the Aussie and the Kiwi are going to move higher. If they are, then that generally signifies risk on in the world of intermarket analysis. Okay, right. So basically, fundamentals, as you all know, I trade based on intermarket analysis, which comprises of TA, FA, and obviously multiple array of variables, obviously, which is obviously incorporates intermarket analysis. So right. So I think I've done my indices analysis, and it's certainly pointing south. The fundamentals remain the same. Obviously, everything is pro dollar. Okay, so we have the ash cloud over Europe now from Iceland. We have the situation in Russia, Ukraine going on. We have the situation in Hamas, Israel, Palestine going on. Okay, so these are all events that are certainly there. ISIS, obviously, situation in Iraq certainly is going out of control because we have several more murders and killings over the weekend, sectarian violence, etc., etc. And also we've got Lebanese and the Syrians firing over into Israel, which obviously is going to escalate that situation there. Right, so that's basically everything that I've just mentioned there is obviously pointing towards a stronger oil price, or higher oil price, higher gold price, and higher dollar, okay, which means risk off, okay. Adding the fact that you've got Miss Yellen post FOMC, post Jackson Hole, obviously is from my perspective certainly is hawkish overall. Summary is hawkish, therefore again risk off. Also with regards to the Aussie and Kiwi, because they're very sensitive to Chinese data last week was weak, okay, so again risk off. And also if you add in the fact that we've got the RBA has stated the week last week or the week before basically stated that the Aussie remains relatively high, and obviously that doesn't bode well for the Kiwi. With regards to Kiwi, dairy prices obviously falling as well. So overall, okay, negative, pro dollar, and it's risk off. Adding the fact that you've got an equity market at the top, again risk off for the Aussie and the Kiwi. Okay, right. So let's see exactly what's happening here. So first of all, let's start with the Aussie USD. Okay, Aussie USD. Let's go to a weekly chart because it's a weekend. Let's just do weekly. Weekly chart really at the moment is just it's a doji. Okay, so nothing that we can gauge from there. Sideways doji. Ignore that. Okay, for now. Daily chart at the moment. I mean, as you can see, you've got in the larger scheme of things, certainly indicates resistance. If you can add that together, okay, there we go. So obviously you put in a bottoming tail, held this double bottom here. That certainly needs to be respected for now. And from the daily chart, really it's trading sideways. If anything, if it's into resistance. Let's have a look at the 4-hour chart. 4-hour chart, obviously we've definitely put in a double bottom, so that now certainly needs to be respected. But we are into trend line resistance. Okie dokie, right? So nothing that we can gather from there. I'll go to a 60-minute chart. 60-minute chart at present, nothing whatsoever there, nothing that we can gather or come to any type of conclusion. Okay, so that's basically where we are. Okie dokie, right, so nothing really from there. Only thing that I can state is the fact that we've got this formation brewing, okay, on the 60-minute chart that I certainly need to pay attention to, which is your left shoulder. Obviously we've got the head looking for a right shoulder, given the fact that it's a bearish engulfing candle, and obviously a potential move lower. Also given the fact that we've got this horizontal resistance, which obviously seems to be being respected for now, although we have a slight move above. Obviously I did have the inverted head and shoulders. Obviously this is your neck, head, obviously this is the head, and then I move higher, but then obviously we move right back down again. So that's certainly been negated from that perspective, the inverted head and shoulders. But like I stated, the geopolitical concerns certainly will be weighing on this currency pair come Monday. So that's the movement there with regards to the 60-minute chart. Certainly remains bearish. Let's have a look at the Aussie pairs versus the key risk barometers. So if I observe my Aussie JPY and see exactly what's happening here, let's go to a daily chart. Daily chart is a breakout. Certainly needs to be respected. We have this unfilled gap. Well, actually it's filled for now, so ignore that. Nothing really. Let's just have a look at a weekly chart. And a weekly chart certainly looks very bullish. Okay, so interesting. Okay, so certainly looks very bullish on a weekly chart, and this is more of a obviously with regards to the fact that we had the talk from Mr. Arby, one of his advisors, over the weekend about a 15 trillion, or I think it was 5 trillion announcement on of potential QE or an easing from Japan next year. Let's have a look at this. So Japanese. Okay, nothing much here. I can't find any headlines at the moment. I'll get all of the headlines later. But for now, this is impressive. This is a breakout. Very, very impressive on the daily chart. Certainly is a breakout, and quite a phenomenal breakout as well. And that's basically what's probably more than likely caused the Aussie to move in the opposite direction. Okay, so let's go to a 4-hour chart. 4-hour chart certainly looks as if it's exhausted now. It's been quite a substantial move higher. Doji candle on the 4-hour chart, so that indicates potential reversal. Daily chart certainly has broke out, needs to be respected. 60-minute chart, but again, it's quite a stellar move. Certainly needs some type of consolidation before it attempts to move higher again. So watch out for this potential formation. So, okie dokie. So that's basically where we are. Nothing really much other than that. And watch out for this obviously horizontal resistance there. We have some type of failed bull flag scenario, but like I said, with regards to geopolitics, the Japanese yen should certainly be catching a bid over the weekend, especially with this additional Icelandic volcano erupting. Okay, and the escalation from Syria to Lebanon with regards to firing missiles into Israel, and obviously the ISIS situation and Russia-Ukraine situation that we already know of. So can the Aussie JPY continue its move higher? Very unlikely, especially with the weaker Chinese data, and obviously the RBA being dovish. So very strange. So very, 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 very strange. Okay, so I mean, this is an article here. This is on August the 19th. I mean, RBA says uncertainty is keeping interest rates low, so the nation's economic outlook remains uncertain because of conflicting forces at play, and reaches that interest rates are set to remain on hold. So again, that doesn't give any real catalyst for the Aussie to bounce. So is this an Aussie move? No. Is it a Japanese yen sell-off? Yes, it is, because EJ and UJ are relatively weak. And as you already know, UJ and EJ are into resistance now, and especially Euro JPY with regards to its HNS formation, and that obviously doesn't bode well for Aussie JPY. So that certainly is into resistance. So quite an impressive move, and as you can see, the 10-minute chart failed to make a new high. So potential resistance there for the Aussie JPY. Aussie CHF. Okay, where are we there with regards to that? So if we look at a weekly chart, certainly no indication of resistance as of there. A daily chart, yep. Okay, so we've tried once, twice, so we're looking at potential resistance there. Okay. If you look at a 4-hour chart, okay, 4-hour chart, again, horizontal resistance. Okay, a 60-minute chart certainly move higher, no real signs of double top, etc. price action yet. So it certainly needs to be respected for the interim before, even if we do make a potential breakout. So Aussie CHF again is into resistance. So slippery character is Aussie at present, especially with regards to the fundamentals and obviously Miss Yellen. So certainly quite tricky. Certainly very, very tricky. Okay, so now that we've had a look at Aussie JPY, Aussie CHF, let's have a look at the Aussie USD itself and see exactly what we can see. Again, watch out for the HNS formation with regards to the Aussie USD. Obviously, if the two CHF and JPY hold that resistance, then obviously that triggers HNS, and then obviously down we go on the 60-minute chart. Okay, and the daily chart obviously has moved higher, not in accordance with Aussie CHF or Aussie JPY at all. So again, one can debate with regards to CHF and Aussie CHF, Aussie JPY, that they will continue their move higher. But for now, fundamentals will trump technicals, and you'll see strength going into the JPY dollar and CHF, given the geopolitical concerns over the weekend. Therefore, fundamentals are dictating that this moves lower, and technicals certainly show some type of resilience or resistance at present. Okay. So that's the conclusion with regards to Aussie USD. Let's have a look at the NZD USD and see if exactly what we can try and conclude from there. Okay, so NZD USD is here. Bear with me. NZD USD. Let's go to a daily chart. Okay, so daily chart remains bearish because we're inside bar. Obviously, the bear flag played out in the end, even though it did look as if it wanted to fail and failed to base out, obviously with regards to dairy prices, etc., going down. And this is basically where we find ourselves in. It's a bearish engulfing candle previously, two following bars, and the last bar was a doji, and then you've got this bearish crossover 20 MA below the 50 MA. So that certainly indicates resistance from my perspective. Okay, 4-hour chart. Okay, slightly messy here from a technical perspective. Obviously, as you can see, the IHS formation failed, and for now, previous support equals resistance, and that's exactly where we are. Okay, so obviously a thrust lower. We rejected the 8420 region based on the previous support equals resistance, psychological resistance, and down we go with regards to Miss Yellen being dovish. Okay, so should I say hawkish? Inverted head and shoulders. Obviously, we did have this pattern here. If you look at the 4-hour chart, but unfortunately we've broken back below the neckline now, so therefore you'll have an emotive sell-off. So Aussie NZD JPY, it's NZD USD certainly doesn't bode well. 60-minute chart, obviously as you can see here now, we tried to make this inverted head and shoulders again, same type of pattern, and as you can see we failed. Now you're looking at a potential HNS. Obviously there you are, and then you've got the bear flag formation, and then down you go. Yep. Okay, so very, very important. Okay, that's basically where we are. Okay, so with regards to NZD USD, down we go, southwardly direction. Okay, so NZD JPY, let's have a look at the NZD JPY daily chart. Obviously is into horizontal resistance here, as you can see there. Okay, horizontal resistance, previous support equals resistance, and obviously this key line across the board, previous support equals resistance. So that's basically where we are with regards to that. Then we have the 4-hour chart. 4-hour chart obviously is into 200 MA. That's basically where we stand with regards to that. And we've got the horizontal line there. So previous support equals resistance, horizontal resistance, and there you go, 200 MA. So therefore NZD JPY is into resistance. A 60-minute chart candle, topping tail, certainly indicating potential exhaustion here. We're in this channel. This channel looks vulnerable, looking for a potential breakout, and then down we go. Okay, so that's basically what we are with regards to JPY, and obviously as we already know, the geopolitical concerns is going to cause a bid for the JPY, and given the fact that EJ and UJ remain weak or into resistance, then obviously that doesn't bode well for this pair either. NZD CHF, the last but not least of this analysis of the two currency pairs. Okay, so let's look at the daily chart. Daily chart, I mean, it's lower lows, lower highs so far. Nothing really different from that perspective. Nothing overtly bullish. 4-hour chart, yes, you do have a double bottom, so that certainly needs to be watched. But again, as we already know, CHF will catch a bid, so it doesn't bode well for the NZD CHF. Sorry, this is the 4-hour chart. This is the 4-hour chart. Okay, yes, so same concept again. And the 60-minute candlestick, yeah, we've had quite a stellar move. Topping tail, potential resistance now. So indicating resistance, and that's basically where we are with regards to that. So if you go back to our NZD JPY, NZD USD, then that more than likely will explain as to why the market went higher than obviously reverse lower in the opposite direction. And obviously with regards to Jackson Hole being interpreted as being more hawkish than everybody expected, adding the fact that you got Chinese data weaker, and it certainly doesn't bode well from my perspective. Okay, So I think that concludes the analysis there, folks. So risk on, risk off, wax on, wax off. Goodbye now.